Most people believe money is earned. Work hard, get paid, repeat. It sounds fair, but if you've ever wondered why wealthy people seem to get even wealthier, while everyone else has to fight for every dollar, you're not imagining it. There's a hidden force at work. Think of it like gravity. The larger a planet becomes, the stronger its gravitational pull. It attracts more objects, more mass, and becomes even larger. Wealth works in a surprisingly similar way. The more productive assets someone owns, the easier it becomes to attract even more wealth. This is what we can call the financial gravity effect. Imagine two people. The first has $1,000 invested. The second has $1 million invested. Both investments earn 10% this year. The first earns $100. The second earns $100,000. Neither person worked extra hours. Neither worked overtime. Yet one person's wealth increased by an amount that could equal another person's annual salary. That's financial gravity. Money begins attracting more money. At first, this sounds unfair, but the wealthy intentionally build toward this point. They spend years accumulating productive assets because they know each asset increases the pull of the next opportunity. Here's another example. Imagine two entrepreneurs. One has almost no capital. Every new project requires loans, investors, or years of saving. The second already owns successful businesses. When a new opportunity appears, banks are willing to lend. Investors are eager to participate. Partners reach out first. The opportunity comes to them. Why? Because success attracts opportunity. Opportunity attracts more success. That's financial gravity in action. The same thing happens with investing. Suppose someone owns a portfolio producing $50,000 a year. Instead of spending it, they invest the entire amount. Now those new investments begin producing income too. Every year, the gravitational pull becomes stronger. The machine feeds itself. There's another side to this concept. Reputation. Imagine you successfully built 3 businesses. People trust you. Customers recognize your name. Investors answer your calls. The next business becomes easier to launch. Not because you become luckier, but because your reputation has its own form of gravity. Trust attracts opportunity. Opportunity creates wealth. Wealth creates more trust. The cycle continues. Another fascinating example is networking. People often ask, why do wealthy people seem to know other wealthy people? Because success naturally attracts similar people. Business owners meet investors. Investors meet entrepreneurs. Entrepreneurs meet executives. Every new relationship creates another possible opportunity. Networks compound just like investments. The wealthy don't only own financial capital, they own social capital, and both create gravity. This is also why your first asset is the hardest to buy. The second is easier. The third becomes easier still. Eventually, your existing assets begin helping you purchase new ones. Rental income buys another property. Dividends buy more shares. Business profits launch another company. Everything becomes connected. Now compare that to someone living paycheck to paycheck. Every dollar has a job before it even arrives. Rent, groceries, utilities, debt payments. Nothing remains to create financial gravity. It's difficult to attract wealth when every dollar immediately leaves. This isn't about intelligence or effort. It's about momentum. The wealthy spend years creating momentum. Once it exists, it becomes incredibly powerful. Another reason financial gravity matters is confidence. Imagine negotiating a business deal. If you desperately need the money, you'll often accept worse terms. But if your investments already cover your living expenses, you can afford to wait. You negotiate from strength. Financial security improves decision-making. Better decisions create better outcomes. Again, the gravity grows stronger. This doesn't mean wealthy people never fail. They absolutely do. Markets decline. Businesses close. Investments lose value. But when you own multiple productive assets, one setback rarely destroys everything. The system keeps pulling forward. There's an important lesson here. Most people spend their lives chasing money. The wealthy spend their lives building gravity. They know that once enough productive assets exist, money begins arriving with much less effort. Not because work disappears, but because the foundation has already been built. So if your progress feels slow, remember this. Gravity isn't powerful when something is small. It becomes powerful after years of steady growth. The first investment matters. The first business matters. The first asset matters. Because every one of them increases the pull of the next. Eventually, you're no longer pushing every opportunity uphill. Your financial gravity begins pulling opportunities toward you. And that's one of the biggest differences between earning wealth and attracting it.